The markets are hard enough to trade without the constant fear of losing money or missing out on another trade. So when we're looking at bear traps and bull traps, it's no wonder people get freaked out that they're about to miss out on that next move, whether that moves to the upside or to the downside, where they have to sell out of their positions because the market's about to collapse. In this video, I want to show you a 120-year trap that has shown up every single decade. We're in the middle of one right now, and now we have the data to look back on the last 2 years and see how much further we have to go over the coming 2 years. Don't go anywhere. This is going to be one of those videos you do not want to miss, and one that you want to come back to. So make sure you bookmark it, share it with a friend, do what you need to do, but as long as you hit that like and subscribe so you can see more of this content come up on your subscription feed. You're at your home of macro cycle analysis with me, Jason Pizzino. We're covering Bitcoin, cryptos, the stock markets, and the real estate cycle. Thanks again for your support on the channel. Let's dive into the analysis, the data today that I've gone through and prepared very carefully for you guys here. So the quote I want to start with is from Jesse Livermore. I've referenced this a few times, especially his book called Reminiscence of a Stock Operator. Amazing book. Money is made by sitting, not trading. This can mean several things. Many like to short-term trade. That's absolutely okay. What he's talking about here, at least in my opinion, is that you make the money as you wait for your signals to play out. A lot of people love to jump in, jump out without any sort of plan. But when we look back on the data, the money is made by sitting. That trade could be hours, days, weeks, or years, but the money always comes from waiting for your plan to play out. So today's video, I'm talking about a bear trap. Basically, what this is it occurs when the price of a financial asset appears to be on a steady decline, or in some cases a sharp decline, traps the bears, and then basically takes off the other way. This is what we've been seeing over all of the stock markets. Here is your trap. Japanese carry trade crash. That was August. We can go back and look at decades upon decades of these traps on the way up to macro bull markets. And I believe we've just seen one of the most recent ones here. Most people thought we're going to go into a recession yet again. Even if we do go into a recession, what does it matter? You trade the price, not the news headlines. So that is what's meant by a bear trap, essentially catching you out with either fear that the prices are going to go lower. Maybe it catches you out because you sell at the bottom and then you watch it basically rally against you. And so unless you understand the macro landscape, it's a little difficult to continue to trade off emotions. The emotions are always the strongest at the lows, and also strongest at the highs, which we looked at in March, especially for Bitcoin, where that top came in, and those emotions were ridiculously high. Now, if you wanted an hour-long video, I can go back to each of these times. This one here was the debt ceiling crisis, and the market took off. Then you had the banking crisis here, and inflation crisis, so on and so forth. How are the rest of the markets looking? Well, the NASDAQ has also recovered, not to the same degree as the S&P 500, but it's still above the key levels here of the 50%. The Dow Jones is within 1% of a new all-time high. Pretty crazy to think that this can happen when just 3 weeks ago, there was fears of yet another recession and emergency meetings for interest rate cuts, so on and so forth. And the rest of the world, again, as always, had to collapse. Germany, how's the rest of the top economies around the world doing? Well, they're within 1.5% of a new all-time high. We can take a look at the UK, also within 2% of a new all-time high, 1.4% from smashing a new all-time high. And if you have been following the channel for some time, at least on my X as well, you know, back in 2023, we posted a lot about new all-time highs after new all-time highs that have continued to happen for many of these stock markets around the world. Most notably, the US breaking into new all-time highs late 2023 and early 2024. Now, something very interesting popped up yesterday, and that was a comment here. So I don't want to point anyone out here. I should have just cut that. But nonetheless, market crashes always happen after all-time highs. Don't be stuck holding the bag. It's 100% coming. Yep, we're going to see a crash. It's 100% coming. So the bear traps where the market falls and then rises to new fresh prices continue to come. But during those times, those bear traps, this is the mindset that happens. And then when the market breaks out to a new all-time high, this is still the mindset that happens, thinking that market crashes always happen from a new all-time high. Well, obviously, they do come from a new all-time high. But how many new all-time highs have there been since the previous old all-time high? So there was 21, 22, and then you had the breakout. So you had a new all-time high this day, this day, this day, this day, this day, this day. I think you get the picture. I could keep doing this on and on and on. And there's a period where you don't get new all-time highs, new all-time highs again, no new all-time highs, new all-time highs day after day after day after day. And eventually, this comment is going to be correct. Eventually, there's going to be a major crash. But like I said here, market booms also always start from a new all-time high breakout. So you've got to decide which side of the fence you're going to sit on. Are you going to be caught out just waiting for this fear, getting caught up in each of these bear traps along the way where the market corrects, and then you have the doomsday saying there's going to be another collapse? Or are you just going to follow history, follow the charts, and just get on board with the ride? Entirely up to you. There's no right or wrong. It depends what your goal is. Is your goal to make money? I think it's probably important to get on with the trend and start to make money and take some profits as the market goes up. As I said, market booms always start from a breakout. They break out from resistance levels, key long-term resistance levels, and in many cases from previous old all-time highs. You can go back and look at over 100 years of data. A very interesting and important one that happened was as the S&P broke out in 2013 from the previous old all-time high, and that all-time high started the collapse to the GFC. And this time in 2013 was very, very fearful. Many said, don't get into the market. It is going to collapse again. But what can we see from history? Well, it was many hundreds of a percent up from that point now. And here is the stock market when you look back on it. That's that point when everyone was fearful. So what if that is happening again? Here is that breakout. Should we see further and further prices to the upside, maybe you start to see some market action that gets really, really hot and heavy to the upside. And a lot of these corrections on the downside have been bear traps. Now, this post sums it up really well. And you can find a number of these across Google where you've got news articles, headlines from major news sources: New York Times, CNBC, MarketWatch, Business Insider, Forbes, CNBC, Forbes, The Economist, Fortune, etc. It happens at these extreme times in the market, a lot of fear. There's your 2013 that we just looked at, 2014. That was a breakout of the previous old all-time high that the GFC started from. And then basically you've seen the market run up. A few corrections in 2015, very, very fearful at the time. Here comes the biggest stock market crash in a generation. Stocks and bonds will crash soon. And then, well, what does the market do? Goes on. Boom, stock surges, a bear market rally that will collapse. CNBC, April 2020. What's happened? Market has boomed again from that point. 2022, global recession is inevitable in 2023. Of course, that never happened. And the same thing continues again and again. Eventually, yep, you'll be right. There will be an all-time high that comes in that doesn't recover. But when you look back on history, as we're talking about here, 100 and something years, 120, 125 years, this is exactly what happens time and time again. So why does that happen? Well, my theory here is the 18.6 year cycle. You got roughly 14 years up of real estate and the economy, and then roughly 4 years down. The source here, Akil and Property Share Market Economics, if you want to dive further into that. So I just want to reference these guys here. They've done a lot of great work for this 18-year cycle. We're in the winner's curse phase now, eventually leads to that peak, and eventually we won't see another new all-time high. But I think that's got a little bit further to go, possibly another year or two. Now, I don't claim to know exactly when that peak is coming in, but you can see the signs of a market continuing to run higher. Now, one thing I want to add into this, which I guess layers on top of or underneath the 18-year cycle, is this data here. Now, we looked at this on the channel a year or so ago, looking at how these decades show that each time you get to the second year and the sixth year of the decade, they have been amazing, amazing opportunities to buy early on and then hold until that last date here. Basically, somewhere around the first quarter. I know it says March, but we'll say the first quarter of the 6th year in the decade. This historical record, absolutely phenomenal. This is looking at the Dow. The S&P 500 has been similar. They obviously work quite similarly here. And my theory, as I've pointed out, would be this happens because of the 18-year cycle, because the land values continue to increase for this roughly 14 or so year period. And then you have that 4 years down. But we're looking at the last 120 years of data for these periods here, roughly that four-year period. The percentage gain, 1902, 1906, 46%. The next decade, so 1922, 1926, 46%. 83% in the 40s. In the 60s, a 60% gain. In the 80s, a 100% gain. In the early 2000s, a 46% gain. And now we're into the 2022 to 2026 period of this gain. If you were to only invest in those times, you've got a 1700% gain on the Dow. The articles picked up the data from every other decade going back to 1899, so to use that particular decade starting in 1902, September 1902. Here are the curves. Really interesting. If you wanted to go through this and do this for yourself, it's going to make your life so much better, so much easier, because you're going to see how each of the decades unfold. And as I've talked about in the title, the bear trap, they can be on any time frame, but we're looking at major bear traps here. These things could be months, if not years. 1903, 1904, there's 1905. 03, down. 04, sideways, then started to come up pretty quickly. 05 and 06. So 05 was a very clear up year. 1925, very clear move to the upside, while 1923, a correction. 24, correction, and then started to get a move on, still closed higher, that is. And in 1925, there's the number 5, big year up. 1945, big year up. 43, 44, bear traps. Interesting times. Could this market go higher? Could it collapse? They're in World War II. Things could have got worse, but stock market went up. The 60s, 1963, 64. 65 was still up, but not as significant as the previous 20-year decades there. The 80s, 1985 into 1986, huge years. The 5th year of the decade, huge. And the most recent one we've had is 2005. So 2003, market did move up pretty strong. 2004 was a correction. And then 5 was a bit of a sideways here. So it's not a 100% that the 5th year of the decade now is going to be an absolute boom. But looking at history, more often than not, the 5th year of the decade could potentially turn out to be something quite phenomenal, especially if we continue on with the fear at each of the dumps, so each of these traps, which I'm calling bear traps, that have lasted now for over 120 plus years. Looking at this particular piece here, you can go back and add each of your news articles to each of any of these lows that occur in the market, and layering that upon the 18-year cycle, we could potentially be in for a mega ride come 2025. As I said, if these sorts of volatile corrections persist throughout 2024, which, well, we've already seen 2 of them. There's April and there is July into August. And then we have the election coming up in about 2 months' time here into November. So maybe we do get a little push higher, corrections, and then the market starts to move away, which basically builds up into the perfect storm into 2025. To get to these big boom years in the 5th year of the decade, you do want to see these sort of corrections, because it keeps shaking out people, keeps shaking out the weekends, it keeps shaking out the sellers, only to see the market run in the opposite direction, bear trap them, and then move to the higher prices. So if you wanted to go back and study each of these 20 years, often you would see the 3rd and the 4th year, people are still trying to figure out what's going on. And then once they've figured it out, the market just takes off. So if you remember in 2023, hopefully you remember, well, people are still trying to figure out what was going on, even though the market was up. And then 2024 rolls around and we're up, but they're still thinking, oh, recession here because we broke to a new all-time high. Like this, market crashes always come. Don't get too fearful here. Market crashes always happen. Don't be stuck holding the bag. And then before you know it, market shoots up. And that fifth year in the decade could be quite explosive, as we've looked at with the last 125 years of data. The main message here is don't freak out when we get these corrections, especially if you're following a chart and you see that price action at these extreme fearful events is higher than the previous low. That is most likely, not a guarantee, but most likely going to be a bear trap, and the market will continue higher. Now, we can see a correction from here. Absolutely okay. We've covered many times before where the next support levels are on a macro scale. So absolutely okay if there is a correction. We just don't want to get scared out of the entire position while the macro cycle is still up, while the data is still on our side, and while we are still well within the 18.6 year cycle to the upside, looking at the winner's curse phase. So if that's the case for the real estate cycle, and the stock market has shown for over 120 years that we're likely going to see more upside, and potentially the fifth year of the decade could be quite significant, well, what does that mean for Bitcoin? I know a lot of people are here for Bitcoin. This is something that I posted back on the 18th of March. So before we look at the price for this bear trap, which we potentially have seen for BTC, we saw that dump in August. Something to remember at these peaks, because you also get that bull trap at the peaks, and basically the extreme ridiculous euphoria that happens at the peaks. It happens almost every single time. Now, we've talked about our 3-day down signal at the peaks, and that showed up in March. And I just suggested, if you remember on the videos, that maybe it was time to see a correction. Maybe the correction was going to be 4 months, 6 months, maybe it was going to be 2 weeks to a month. We weren't sure at the time, but we were able to review the data and then get closer to what that was going to be. Now, at the time when I talked about this, it was met with a lot of hate. And like this comment says here, hope you've prepared yourself for the comment section, because no one wants to hear it at those peaks. That's all I want to say about this, preparing ourselves for that next peak, because during those times, to be able to get to those big boom stages of the fifth year of the decade, everyone has to believe that it's impossible for the markets to go down. And you guys are in that front row seat, having followed Bitcoin now, and understand how these emotions work at a more localized scale. Localized meaning we're in this weird crypto space where people get very emotional compared to the stock markets. Maybe it takes a little bit longer for those. It's an older market. But these young markets, young minds, they act like immature morons a lot of the time. I'm not spared from the emotions either. I still feel it at the peaks. Sometimes I get a lot more fearful than others at those peaks, as you've seen from a lot of my posts here on the channel. And then at the lows, it can also get more fearful, maybe even more greedy when it should be time to relax. That's why I focus a lot on my plan. If the patterns, if the signals, if my indicators are suggesting now is a time to not be entering, or basically take a little bit of that position out, I just have to follow that plan, even if the emotions aren't feeling the same as what the plan is saying to do. Now, if you don't have a plan, definitely get onto that now. If you want to learn how to do that, we have a free Ultimate Trader Accelerator. We're going live on Thursday morning. So if you want to join that for free, link is in the top of the video description here. Register now. Use these links, Bybit, Bluffin, and CoinCatch in the video description to join the live training session that we have coming up on Thursday morning. That'll help you get started with your plan for short-term and for longer-term trading. Essentially, the longer-term stuff, similar sort of signals, you just have to wait longer for the signals because you're working on a longer-term time frame. So that brings us to BTC, and what I'm looking at for this next stage, as we've obviously talked a lot about the 125-year cycle here, looking at those bear traps that happen on longer-term scales, especially through that sort of year 2, 3, and sometimes year 4 of the decade. So could we be sitting in one now for Bitcoin? I happen to think so. You can see how the market has corrected here into this August low. There was a correction in July and also another one in May, on May 1st. And each of those times, it's been bought back quite quickly, basically in that following week. So although the market went underneath the first low, which was at 56.5K, the following week, it closed back above it. So strong buying happening as the price went under $60,000. Then we had the August crash, and again, strong buying happening as the price went under $60,000, and it managed to close at $58,000 for that week. So there's been a lot of buying happening underneath that roughly $56,000 level where that first low came in. So lots of support for now. What we need to see is a turnaround here, basically a higher low form, so some sort of correction, and higher closes above our 50% level again. So the 50% level is still sitting at $61,500. So like I said on the stock markets, should we see some sort of correction, maybe we see a price rally higher, get rejected again, come back down, that might bring out more of the fear. People saying, oh, look, it's hitting $68,000, $70,000 again, another rejection. The market's about to collapse from this point, brings on more of that fear, and then puts in a higher low. And a higher low can be anywhere above the $49,000 low. So it can be quite significant here, which would then basically scare a lot of the market out. And you would see that again on the market sentiment. So keep watching your fear and greed index here. If we were to see this climb a little higher, and then if we saw that correction, so there's a lot of ifs at the moment because we're trying to plan out here for the next sort of several days, maybe even up to several weeks, then looking to the downside on the market sentiment, if it was to come up a little higher than each of these lows here, so anything sort of above that sort of 17, 20-ish, that could be a good sign that the market's not as fearful anymore, even though the price is coming back down. So it could be a good buying opportunity. That's what we looked at the March low. So you got the March low here when the banking crisis happened. That was one of the most fearful events in the media, at least, but the market sentiment just didn't do it. It just did not break down below the FTX low, below the DeFi low, and basically headed straight up from that point. So that could be something to watch here if we're going to see a price correction over the coming several weeks, and then the market sentiment lands higher than what we've just seen at this August low. I was planning to go into some timing patterns that are playing out on Bitcoin. Really interesting stuff that continues to show up low after low after low, and even through those tops to bottoms, with some very significant highs to lows. Now you could take this away and do it yourself. Otherwise, I'll come back to it in a future video. But for TIA Premium members, I'm going to go through this in tomorrow's live stream. So make sure you are watching that tomorrow morning, Wednesday morning, or if you want to join that, it's TIA Premium. Link is in the top of the video description. All right, guys, let's take a final look at this longer term cycle here for Bitcoin. So we're looking at the years 3 and 4 being the bear traps. And within those bear trap years, we've definitely seen multiple bear traps. 2023 saw the banking crisis. Then it saw the drop into June. I believe it was something to do with the SEC and Binance. And then we had another one of those in September. And each of those occasions saw higher lows, equal lows, and then a very significant move up. Pretty decent pump. Again, we've looked at this 6 months. We're in our 5th month here. Very significant move to the downside in August. And I'm over this end of 2024, I'd basically be expecting a breakout of these highs. So basically breaking through $74,000. Taking a look back to the previous moves, plenty of bear traps happened through the first half of the Bitcoin cycle, the Bitcoin bull market, before you get into that bear market. And from each of those occasions where we had the consolidation from that area, the market boomed out of those lows and did not return back to those prices. Case in point, you've got the 2019 accumulation before it broke out, did 340% to the peak at 14 grand. Another consolidation before the final bull market into that April top. Then you got the previous cycle, 2016, 2017, with multiple bear traps. Apologies if I called it bull traps anywhere in the video, but essentially you've got the decline here happening over a longer period of time. As we've covered, these are roughly 4 to 6 months, in some case 7 months as well. Long declines, move to the upside, and then a correction follows again, trapping a few more people, and then basically you don't really see the market turn back to come back to those prices. Cycle prior to that, again, consolidation, roughly 4 to 6 months, another 4 to 6 months, a breakout, did not retest the previous area, another breakout, another consolidation, and then a breakout to that final peak. The big question on everyone's mind is, where does Bitcoin head to now? Should it break out of $74,000 after these significant reaccumulation periods or potential reaccumulation areas? That's all I've got for you today. Make sure you subscribe and like the content. I've got the timing video coming up soon as well. And I'll see you guys back here at the next video. Till then, take care and peace out.